Today, more than ever before, commercial real estate investment, brokerage, and lending firms are testing job candidates that are applying for analytical positions by including an Excel modeling case study as part of the interview process. And in most cases, exactly what is going to be included on these tests is a little bit of a wild card, which tends to leave people pretty confused as far as what they should be preparing for. But even though it's tough to tell exactly what a case study is going to look like, I've seen enough of these over the years to know that most commercial real estate Excel exams consist of a pretty similar structure and ask very similar questions that follow a common theme. So to help you get clear on what you should be focusing on to make sure you're prepared for an upcoming Excel exam that might be given to you during the process, in this video, let's walk through the most common layout of a commercial real estate case study exam and the specific things that you'll want to be ready for to pass this part of the interview process. So to make sure companies are actually getting what they're paying for, many commercial real estate investment, brokerage, and lending firms will give their analyst and associate candidates an Excel modeling exam during the interview process, essentially looking for the candidate to prove their abilities that they said they had on their resume. And often, these exams are going to be designed in a case study format with a general description of a sample acquisition or development opportunity, and then a modeling task and associated questions around your analysis of the deal based on the information provided. So with that, the first thing that's going to be tested in almost all of these cases is going to be your ability to create a pro forma cash flow model from scratch in Excel, given information on both current operations of the property and key assumptions about the future performance of the deal as a whole. On these tests, companies will often provide an assumed purchase price, in-place revenue and expense metrics, projected capital costs, and even sale assumptions around when the property is projected to be sold. And from there, it's going to be your job to take that information to build out cash flow projections over what is usually going to be a projected 3 to 10 year hold period, building out forecasts for net operating income, cash flow before debt service, and the eventual sale proceeds generated on the deal. Companies also tend to expect these models to be built out dynamically, meaning that the values within these cash flow projections need to be calculated using formulas that are directly driven by the manual input assumptions in the model, and these values should change automatically based on adjustments to these assumptions to be able to quickly and easily analyze different scenarios. And this leads me to the second part of an Excel modeling case study, which involves actually using these cash flows that you've built to calculate the key operating and return metrics on the deal that are going to help with the decision-making process around how much to pay for the property and the risks associated with the investment overall. In my experience, the most common metrics you'll see tested on a case study exam really boil down to the internal rate of return, the equity multiple, the cash-on-cash return, the debt service coverage ratio, and the debt yield the property is going to generate. Companies will also often ask candidates to calculate key return metrics on both an unlevered and levered basis to see the impact of debt on the property's cash flows, with unlevered metrics measuring returns before factoring in any loan proceeds, loan payments, or loan payoffs on the deal, and levered metrics measuring returns after factoring in the impact of each of these amounts. Now, usually, even after calculating returns, you're not quite done yet, and companies are going to want to see that you can actually do something with the metrics that you've calculated and that you can run an additional layer of analysis by building out a sensitivity analysis and solving for a valuation based on target returns. For the sensitivity analysis, this is usually going to involve analyzing a variety of different scenarios, usually looking at the impact of changes to things like the assumed exit cap rate, the hold period, the annual revenue growth rate assumption, or even different loan amounts on key investor return metrics like the IRR, equity multiple, or cash-on-cash return. And in addition to the sensitivity analysis, you may also be asked to value the property given a target return metric, usually an IRR or equity multiple value, testing your ability to back solve for a maximum offer price based on the returns required by investors. Now, once you've built out your project level cash flows, many firms, especially in the private equity space, will also want to test your ability to model JV partnership structures, and to do that, a waterfall analysis is also commonly included within an exam prompt. Now, especially for entry-level analyst roles, I often see questions around this topic being categorized as extra credit, and at most firms, this generally isn't going to be the core of what you're going to be evaluated on. But if this does come up in a case study format, regardless of how the question is labeled, this is still going to be used as a comparison tool between you and other candidates. And when a waterfall structure is included on a test, in most cases, that structure is going to be IRR based, meaning there's going to be a preferred return to limited partners on the deal based on a targeted internal rate of return, and it's going to be your job during the exam to calculate when the cash flows distributed to that limited partner ultimately exceed the distribution requirements to hit that preferred return. In a case study setting, most waterfall structures aren't going to include multiple layers of additional hurdle rates above the preferred return, so during test prep, I would focus the majority of your attention on understanding how to calculate an outstanding preferred return value at any given moment in time, and then how to calculate cash flows over that preferred return based on a given promoted interest value. And if you're not familiar with the term promoted interest, this just represents the percentage of cash flows over the preferred return that are allocated directly to the general partner on the deal, in addition to the percentage of cash flows they would have otherwise been allocated based purely on their equity interest in the project. So you want to make sure that you can calculate the cash flow split between two partners given a promoted interest value and each partner's percentage ownership interest in the deal that you're analyzing. Again, this topic isn't always tested in a case study format, but if this is something that's included, this can be an extremely confusing subject if you haven't been exposed to modeling these types of structures before. So if you have the time to prepare and you feel comfortable with modeling general property level cash flows already, I would highly recommend at least getting familiar with how these structures operate and the general framework for building out an equity waterfall model directly in Excel. Now, once you've modeled out your project level cash flows and your partnership level cash flows, an interview case study exam is often going to wrap up with a qualitative analysis that tests your ability to interpret and explain everything that you've built. Along with providing general operating assumptions, some firms will also provide some additional documentation at the start of the exam, including things like an offering memorandum, a rent roll, or T12 financial statements, which are all intended to give a candidate a deeper level of insight into the property and the risks and opportunities that might come along with the deal. And with that, the final requirement within a case study is often the requirement to tie the analysis together by doing things like listing out the biggest potential downsides of the deal, describing how these risks can be mitigated if the company did decide to move forward with the investment, deciding on an appropriate valuation for the property given the risk profile of the asset, and whether or not you would recommend investing in the deal at all given all the information provided. The goal here is for a company to be able to see that you're not only skilled in Excel and financial modeling, but that you can actually do something with the models that you create and think critically about your own work to spot patterns, identify risks, and uncover opportunities when analyzing new deals. Ultimately, if you can get comfortable building out dynamic monthly cash flows given a set of assumptions, you can calculate key metrics like the IRR, equity multiple, cash on cash, DSCR, and debt yield. You understand waterfall modeling, and you can calculate cash flow splits between partners, and you can explain your analysis and think critically about the pro forma you've created. These things should all put you in great shape to ace an Excel interview exam if one is thrown your way during the process. And if you're preparing for an upcoming case study right now, or you just want to get ahead of the process and make sure that you're ready when the time comes, as always, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, our entire library of pre-built acquisition, development, and waterfall models for multifamily, industrial, office, retail and mixed-use deals, and you'll also get access to private one-on-one email-based career coaching if you're looking to break into the industry and want some additional guidance and feedback along the way. And if you like this video and want to see more content on this channel on Excel exams and case study prep, make sure to hit the like button and let me know in the comments any other topics you run into that we didn't cover in this video. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.